Hello again, business owners, especially business networkers. I'm simply checking in and following up with ChatGPT networking from the AI Super Campus of podcast listening and learning. You can discover how simple it is checking in and following up with ChatGPT networking and how much it can dramatically improve your results. I hope to see you at the AI Super Campus so we can continue the conversation. Just click the links below this video and register free with just your email. I'm Mike Hayes.
Okay, let's unpack this. We're looking at a really interesting intersection today. AI meeting impact finance.
Right, two huge forces colliding.
Exactly, and we're doing a deep dive using source material from recent sustainability finance news that explores exactly this, how AI might just reshape investing for positive outcomes.
The big question.
It is. So our mission here is to pull out the key takeaways from this reporting. You know, the opportunities AI presents, maybe some unexpected ones, the really crucial risks we absolutely have to consider, and what it all means for you, whether you're already investing or just curious about tech-driving change.
Yeah, the source really frames AI as potentially transformative, doesn't it? More than just another tool for a sector that's already tackling complex stuff.
It does, and it starts with something fundamental, data analysis, how we even assess impact.
Right. Think about evaluating a social project traditionally. I mean, you're wading through reports, surveys. It's a lot.
Mountains paper, yeah.
And the analysis we looked at highlights how AI can chew through these vast data sets. We're talking terabytes sometimes of community info in, well, hours.
Hours, wow.
Yeah, finding patterns, correlations, stuff that might take weeks for a human team to spot, if they spot it at all.
And that source material really emphasized it's not just about looking back, right? It's predictive too.
Exactly. Predictive analytics is a huge focus in the reporting.
Okay, so what does that mean practically?
Well, the news source explains it as forecasting potential investment outcomes, like benchmarking community impact using historical data, running simulations.
Simulations?
Yeah, even guiding funding by pinpointing factors the AI predicts lead to more durable success.
So for you, the investor, this could mean what? Better risk assessment.
Precisely. Access to really detailed probabilistic outcomes, risk profiles that were, frankly, impossible before. It changes how you evaluate where your capital can have the biggest positive effect.
That sounds incredibly powerful. A clearer view of the potential good and the financial side. The source had that example about community projects. Homelessness initiatives, I think.
Yes, exactly. By simulating different housing models, analyzing past results with algorithms, the idea is investors could make far more informed decisions.
Aiming for interventions with a better statistical shot at working long term.
Right. It's about moving the needle from, say, relying on anecdotes or limited data towards a much more data-informed, strategic way of improving things.
There's always a but, isn't there? With that much power
comes responsibility and risk. The source is very clear on this. The potential is huge, but the risks need active management. Absolutely.
Like what are the main concerns highlighted?
Well, data privacy and security are obviously huge, especially with sensitive community or personal data.
Makes sense.
And then there's the bias issue. The analysis really flags the danger that AI models, if they're built on biased historical data or just not designed carefully, they could accidentally end up perpetuating the very inequalities we're trying to fix. Biased funding decisions, for instance. It's baked into the text sometimes.
So using these AI tools requires real vigilance, a critical eye. The source mentioned transparency, didn't it?
Critically important. Prioritizing AI models where you can actually understand how they reach a conclusion, explainable AI.
Right.
It's not just about protecting the investment. It's fundamental for protecting the communities you're aiming to help. The source suggests, for you as an investor, don't just read the AI's impact report.
You need to dig deeper.
Yeah. Question the data sources. Question the AI's methodology. Understand the potential pitfalls.
It really sounds like finding that balance is key. Embracing the power, but being acutely aware of the dangers.
Non-negotiable.
So let's wrap this up. What are the core takeaways from this reporting for our listener?
Okay, the main message from this sustainability finance news seems to be AI offers this immense potential, yes, to help you pinpoint opportunities, assess risk better, and impact finance. But
there's the but again.
Realizing that potential for good means you need to be proactive. Educate yourself on the tech, what it can and can't do. Evaluate the ethical side, especially bias, and demand accountability for how it's used.
It's not just about your portfolio returns then.
Not at all. It's crucial for making sure AI genuinely contributes to the positive societal impact everyone wants. That proactivity is key.
That shift from just seeing potential to demanding responsible use is vital.
It absolutely is. And, connecting this to the bigger picture the source touches on, it suggests the future here isn't just tech or money, it's collaboration.
Collaboration.
Between who? Investors, technologists, and critically community leaders. Everyone working together to shape how these tools are deployed.
Okay.
And this raises an important question, really, for you to think about. What does that deep cross-sector collaboration actually look like on the ground? And maybe more importantly, how can you, from where you stand, contribute to shaping it responsibly?